Hi, my name is Cameron Freimeyer. I'm CFO of Babcock & Wilcox, and you are watching Taking Stock.
2 minutes to go, really 1 minute and change to go here until the closing bell here at the New York Stock Exchange, and the major market indexes are trending for yet another round of fresh all-time highs. That is the tail of the tape for the S&P 500, the Dow 30 components, the NYSE Composite Index, as well as the small caps, which currently are up 0.4%. No shortage of data over the course of the next few days for investors to digest. Tuesday, we get the CPI print. Wednesday, the November retail and PPI wholesale inflation print as well. Staples, industrials, and tech, those are your strongest performing sectors on the day. Energy, financials, and telecom leading losses to the downside. Welcome to the broadcast. You're watching Taking Stock. I'm your host, JD Durkin. Mere moments away, you can already hear the crowd. They are fired up and ready to go. We got the closing bell for you. The team from Riskified, ticker symbol RSKD, set to do the honors. Gregory Farinello joining us on deck after the bell, but now, time for the close. And there you have it, folks. We'll take a look at our final tail of the tape. Despite the fact the index has started this morning session in negative territory, we're finishing once again at all-time highs with the S&P up 0.1, the Dow up comparably, the NYSE and the small caps both up 0.4%. One of the bigger macro stories investors had to digest coming into this morning, reports of the Department of Justice investigating Jerome Powell, the chairman of the central bank. This was Powell's response released onto social media late last night. Take a look.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
A remarkable series of events with regards to the Department of Justice in Washington, the Trump administration, and the president's personal frustration with Jerome Powell, and simply put, a remarkable response from the chairman himself. Let's bring in our first guest, a good friend of ours here on the show, Gregory Farinello, head of U.S. rates at Amerivet Securities. Thanks for being here for another round of all-time highs at the big board.
JD, what a day, right? I mean, I didn't get much sleep last night. I'm going to be perfectly honest about that. I was a little surprised with the subpoena in general, but when you look at the dynamic between Jerome Powell and the president, this has been going on for a long time. So I think it's noise in the end. I think the market is trying to look through it. Jerome Powell he's going to finish out his term through May, and he's going to leave the board, and that's the reality of it. And the president will have his new pick in terms of who he wants. The question is, how much further can rates come down from here, regardless of who he puts in place?
That's interesting on the timeline for Powell. Is that your expectation that much like Ben Bernanke and Janet Yellen before him, once you're done with your years as chair, he still has a few years of eligibility on the Fed. You expect him just to step down altogether?
He does have eligibility on the board, but he's a pro. He's going to step down either way. It doesn't matter, but he will finish out this term. I think, look, rates have come down. They've come down a fair amount. In fairness to Chair Powell, he has brought rates down over time. So he has acquiesced, I think, a little bit to what the president wants. Rates have come down. I think the frustration is the long end has not come down. And the long end has not come down because inflation is running a little bit higher than expected, and growth is running a little bit higher than expected. That's why this administration is trying to get creative in terms of what they produce going forward, in terms of making things more affordable.
Gregory, we'll learn a lot more about things like net interest income, the strength in the spending of the underlying U.S. consumer this week for big bank earnings. We get kicked off tomorrow morning with Bank of New York Mellon. We'll also hear from J.P. Morgan, Goldman Sachs, and Wells Fargo, et cetera, later in the week. What are you tracking here? Because we know the big banks usually kick things off. I can't believe it, but we're back to earnings season.
The big banks are in great shape. There is some concern, I think, with some of the smaller banks, maybe with this cap on expenses in terms of credit cards. The big banks are in absolutely fantastic shape. We're very constructive on the big banks in general. The yield curve is steepening, which is friendly for the big banks. And overall, we are extremely constructive on this economy going forward. And that's why you look at a day like today, and you're like, the market's down overnight the whole bit, and we come right back. So I think the markets are in good shape. I think the big banks are in good shape.
Yeah, what was your reaction? Because we had that on social media Friday night from the president, essentially seeking to cap credit card interest at 10%, but not in perpetuity, only for 1 year only, which just so happens to be the year of the midterm elections.
Well, it's affordability, right? I mean, that's the buzzword for this year. It started in New York City, and it's trickling over. So when you look at 2026, you look at the midterm elections, look, there are a lot of people out there that are hurting, and I think we need to be cognizant of that in general. And so affordability, I think, it's a big issue here. And we've been writing to our clients that this administration will get creative in terms of how they make things more affordable. The question does become, though, we've got a president who is a true capitalist, and at the same time, he's implementing some things that, you look at it and it's like, this is not really capitalism, right?
Sure.
You can't allow private equity firms to buy homes. You're capping credit card, debt and bills and all that kind of stuff.
Yeah.
So this is, I think it's front and center right now. I understand what he's trying to do, and it's a good thing that he's trying to do, but affordability is going to be the word of 2026.
Yeah, there's no doubt. Zohran Mamdani put that at the forefront of his mayoral campaign here in the Big Apple, and we see Republicans and Democrats saying, hey, that guy may have gotten it right. We may have different ways to get there, but affordability will be something we talk about every day across kitchen tables and here on Wall Street from now to the election.
Absolutely. It's the word of 2026.
Gregory Farinello, head of U.S. rates and Amerivet Securities, our good friend, kicking off the broadcast. Thanks for being here as always, my man. Nice to have you.
Thank you, JD.
My man, go get him. Josh will grab your microphone. Jeff, you and I are going to head this way for a walk, and we will bring you expectations for Delta Airlines, which aside from the big banks, we'll also hear from Delta Airlines, set to report tomorrow morning for their fourth quarter results. We are expecting revenue of about $15 billion for the quarter and expecting earnings per share of $1.53. Delta Airlines has actually beaten on revenue expectations every quarter for the last 2 years. The stock is already up more than 26% off its recent pre-Thanksgiving mid-November lows and up 8% over the last 52 weeks. Investors in Delta stock hoping for both a beat on the top and bottom line as well as a boost of guidance. We want to hear forecasts for what things look like for Delta for 2026. We'll take a look now at two NYSE notables. How about Constellation Brands, the brand behind Modelo and Corona? Perfect for 4 o'clock on a Monday. One of the best performers in the S&P 500 today, reaching its highest level going back to September 2nd. Bayforest Capital growing its position in Constellation Brands by 5,000%, according to their SEC filing. Constellation having a very strong start here to 2026. Shares up already 10% year to date. And finally, how about Visa? We were talking about it here with Gregory a moment ago. Down on the day following the president's announcement Friday night of his intention, at least, to sign an executive order to cap credit card interest at 10% for a period, like we said with Gregory, of 1 year. Likely it's unenforceable, according to many analysts, without an act of Congress. We'll hear what the big banks have to say this week. Visa, by the way, is set to report next Thursday, January 22nd. We will hear what they and MasterCard and the other credit card payment processors have to say this quarter. All right, recently here at the New York Stock Exchange, we held an amazing event called International Day. That's where my good friend Kristen Scholler sat down with Yanan Wu of Singaporean fintech Surfin. Take a look.
We're here on the floor of the New York Stock Exchange for International Day. All sorts of leaders from around the world, including in the C-suite, have joined us here at the NYSE to talk about the future of global growth. And I'm pleased now to be joined by the chairman and CEO of Surfin, Yanan Wu. Yanan, welcome.
Nice to meet you, Christine.
Wonderful to have you here at the Stock Exchange, especially for International Day. How are you finding it going so far?
It's very exciting and very dynamic, and see all the folks from all over the world, essentially, to have this special celebration at the New York Stock Exchange.
The energy definitely feels palpable. I want to talk a bit about your business, Surfin. Companies around the world are leveraging artificial intelligence. What is Surfin's unique approach to AI?
Yeah, thanks, Christian. So surfing, as the name stands, surf along the technology wave to bring the financial inclusion to the young demographics in emerging markets. Surfing was headquartered in Singapore since 2017, has been 7 years, almost 8 years now celebrate, and we can celebrate here in New York Stock Exchange to provide financial inclusions through AI technology currently to 90 million young demographics through big data modeling and Gen AI technology in 10 emerging markets across 3 continents. We have dispersed over $4 billion US to these young demographics so that they can have a financial credit access and also the payment remittance and credit cards and as well as wealth management.
What is the investment thesis for Surfin?
Yeah, surfing has, is application for AI technology. We have provided in-house proprietary technology, cutting edge to provide social credit. Surfing has invested in this market, provide surfing credit score, surfing credit lab, and surfing chatbot for the interactive financial products to these younger demographics. Many of them, they may be the first time to get financial access. And some of the young SME owners, they want to start enterprise, they want to start a new life. And they can immediately, within 1 minute, get a credit access and a micro lending product. So I think through this technology, we can be more scalable and sustainable and also sustainable for these young demographics through AI technology, digital fintech.
How has this investment thesis impacted your revenue growth and company performance?
Thank you, Christine. For the past 7 years, we will benefit for this digital mobile penetration and Gen AI technology. And that make our financial access and unique product experience very scalable and also very sticky for the younger demographic. And that also lead to a 50% year-on-year revenue CAGR growth. And last year, 2024, we have delivered, $250 million top line. And this year, we'll deliver $500 million, double the last year revenue. And we also happen to enjoy double-digit net profit margin for 4 years in a row. And we'll hit 60 million net profit this year.
Yanin Wu, Chairman and CEO of Surfin, thank you so much for joining us here at the New York Stock Exchange.
Thank you, Christine, for having me.
Let's do it, folks. Welcome back to the broadcast. You're watching Taking Stock. Time now for the latest headlines you need to know on this Monday in the world of fintech, crypto, and artificial intelligence. First up, as we said off the top of the show a few moments ago, the crypto majors kind of in mixed territory for this Monday. Bitcoin trading up 0.5%, Ethereum selling off 0.6%, and Solana is up 3%. How about that? Next up, Trump-backed World Liberty Financial set to launch its first crypto lending platform as its USD1 stablecoin climbs the ranks and on-chain credit markets continue to heat up. And finally, crypto ATMs under fire. Are they ever? After new data released from the FBI shows that scams cost Americans more than $330 million last year in 2025, sparking state and local efforts to ban the machines altogether. Those are the headlines you need to know. Say hello to our next guest. Eunice Giarta is the co-founder of Monad Foundation, here on the floor of the big board, making what I believe is her Taking Stock debut. First time on the show with us.
First time on the show, first time on the floor as well.
Oh, and first time here.
First time here.
I always call this place the Yankee Stadium of Finance. It's so great to have you here today.
Thank you. It's lovely to be here.
Could you give us, our viewers, first and foremost, a bit of an introduction to the work you and your colleagues do at Monad for anyone
absolutely.
a bit unfamiliar?
Would be happy to. So at Monad Foundation, we are the team behind the Monad blockchain. We are working towards accelerating the ecosystem and growth of Monad for applications, for users, developers, so on and so forth. And we're just excited to get going.
That's amazing. It's great to have you. What is driving the shift of stablecoins becoming real financial infrastructure, and how would you describe that ongoing shift, Eunice?
Yeah, absolutely. So BlackRock actually published the 2026 Global Outlook not too long ago, just a couple of months, and in it they talk specifically about stablecoins and how stablecoins as a new asset is representative of the future of finance. More specifically, how crypto is now leaning into mainstream finance and the opportunities therein for infrastructure. So as an example, today there's about 300 billion circulating supply of stablecoins in the market. When the Outlook was published just a couple of months ago, it was only 250 billion. So within a short span of time, we're already increasing the adoption and issuance of stablecoins. So this is just a glimpse into the future.
Oh, so let's talk about that future, but that's significant growth and adoption in just a short amount of time. What are your expectations for further adoption, institutionalization, and beyond for the broader stablecoin ecosystem in 2026?
Yeah, great question. So stablecoins, I think, represents the graduation of crypto from stablecoins from being just crypto native to starting to bleed into mainstream finance. So examples being payment streams, payroll, things like treasury flows, and then some. And what's more interesting about that is a lot of these flows can actually be completely abstracted away from consumers. So an end user might not even know that they're using crypto under the hood through stablecoins, and it just provides a lot more accessibility and flexibility.
Well, I still have you. Where do on-chain cross-border payments work best today, and where are they not quite working maybe as well as they should be?
Yeah, so there's a lot of frictions when it comes to especially global payments. In our increasingly global ecosystem, oftentimes we're found there's lots of intermediary steps, basically, adding complexity, adding time. What's nice about stablecoins and crypto in particular is that it standardizes and simplifies a lot. So through that standardization and simplification, by virtue of crypto being a global ledger, global markets, we start leaning into things that are much more accessible, cheaper, faster, and verifiably on-chain. So publicly provable.
That's amazing. And that's what it's all about, that ease and accessibility, continuing to improve on things that once were one way and making them better for the future. Eunice Giarta, co-founder of Monad Foundation. You crushed it. Thanks for being here.
Thank you so much.
Come back anytime. Folks, don't go away. Much more Taking Stock coming up live from the big board after this. Let's do it. Welcome back to the show. Time now for the headlines you need to know on this Monday afternoon. The world of startups, raises, and rounds. First up, AI startup Anthropic raising $10 billion at a $350 billion valuation. My goodness, nearly doubling its worth in just 4 months. This as investor money floods back into artificial intelligence. Next up at this hour, CrowdStrike set to acquire identity security startup Signal, stylized SGNL, for $740 million, beefing up its defenses against AI-powered threats. And finally, Elon Musk's xAI has spent nearly $8 billion over the last 9 months. Racking up losses is the company as it builds data centers and software aimed at eventually powering Tesla's humanoid robot, Optimus. The New York Stock Exchange's very own Anna Mello, now breaks down the history of the iconic boardroom clock upstairs here at the NYSE. Take a look.
To travel with something this old and this rare and this irreplaceable is both exciting and nerve-wracking. Nerve-wracking because if something should happen to it, you cannot get another one, which is the greatest fear of, I think, any archivist. But exciting. You don't get to bring a document like this home that often.
When something turns 400, it's worth throwing a little celebration, and having this bond and having the connection between the New York Stock Exchange and the Netherlands that goes back, 400 years is really something to mark. Think about this bond. It's basically raising money to repair a dike and build a land for boats to land, and the whole community would benefit from it. And increasingly with climate change to not just combat climate, but also coincide with the changing world.
You look at something like this and you see not only people partaking in a tradition, but coming together for something bigger than themselves. I don't know that many people necessarily think when they buy a bond that they're doing something patriotic, and I don't know that people necessarily think of it that way, but I look at something like this and that's in many ways what I see.
When this bond was issued December 10th, 1624, it's written that every 6 months it's supposed to be brought back to where it was signed, which is where we are today, and presented, and then the interest is given. And so along the margins of it are all the years going back from 1625, 1626, moving on. It's really a cool experience to be part of it, and it's really cool how it is 400 years old, it is history, but it really is tying into a lot of the conversations we're having in Intercontinental Exchange today around valuing climate, valuing water management, and valuing these products that are, in some ways they're the oldest products we have, bonds, but also it's some of the most innovative stuff is happening in them. If you think about it, we're sitting in the Netherlands, a country that's had to think about water management for its entire existence. But now everywhere it does. If you think about closer to home in the United States, we are seeing water in places we haven't had water before. We're seeing water not in places we used to have water. And so this idea of what can you learn from, a 400-year history, and actually longer, the bond's 400 years old, but the underlying structure that the Netherlands used, is we can all learn from that as the idea of basically coming together collectively as a community to put together the funding, and also not only that, the infrastructure needed to combat or in some ways just redirect climate. We are in some ways looking back to also look forward, and our parent company, particularly Intercontinental Exchange, begins to look at the products we're going to need, not just to track and put data to climate change, but also create the investment products we need to either live alongside it, combat it, or even potentially reverse it.
This one is really a living document. It's not just capturing the purchase of debt from a company or a government. It's capturing that moment and then every year thereafter. So you have the text of the bond itself, of the agreement for how much is being lent, but then all around the edges, every single year that an interest payment was made, you have someone else's hand being affixed to this document. Someone coming year after year after year for, at this point, centuries to engage in the same fairly simple act, but a meaningful act, year after year. And so it's amazing that it's a living document. It's still serving the exact same function it served the day it was written. And that's, in many ways the beauty of what we're here for, is to still partake in that same act that someone partook in 400 years ago.
The core of what that bond does, or what the markets do, hasn't changed, which is raise the capital needed to do something big and then help everyone hopefully benefit from that, either from what that builds or from investing in it. So what changes around it is obviously the technology, is the data, is the ability to connect things. We have bonds in the New York Stock Exchange that were sold in the Netherlands that were US bonds from the 1700s, but now instantaneously there's a global ability to invest in products and trade with each other and share information and share data.
That's the beauty of this document, is that you look at it and you see the physical evidence, line after line, of that promise kept by both sides for 400 years, and hopefully 400 more. It's an important document. It should get its due and get to see the world and get to come home once in a while.
I'm Scarlett Sieber from Money 2020, and welcome back to Hindsight 2020, where history reminds us that rights aren't just for TikTok comments, they're for contracts too. Today we're going to be rewinding the clock quite far back to December 15th, 1791. The Bill of Rights gets ratified. 10 amendments that made America, well, America. But here's a twist. You learn about this a lot in school, and it's usually about politics. It's also about economics. Those rights gave investors confidence. Property rights? Check. Contract enforcement? Double check. Without them, capital markets don't thrive, tech innovation doesn't scale, and your favorite fintech app, it never gets funded. Think of it like this. The Bill of Rights was the original terms and conditions, except people actually read it. It set the stage for capitalism, entrepreneurship, and every IPO since. And we're obviously up in the IPO building here. So next time you scroll past a privacy policy, remember, December 15th was the day America signed the ultimate user agreement. Until next week.
Welcome back to the show. All-time highs across several of the major market indexes, the S&P 500, the Dow 30, the NYSE Composite Index, as well as the small caps. Tomorrow here on Wall Street, we will get the December CPI inflation print. We are expecting core CPI to have risen 0.3% month over month and 2.7% year over year. Also earnings in the morning from JP Morgan Chase, Delta, and Bank of New York Mellon. That's going to do it for today's edition here on Taking Stock. Have a great night. We'll see you again tomorrow.